now. Today I'm talking with Adam Trexler, the founder and CEO of Valaurum. If you're not familiar with Valaurum, they're the company behind the Aurum Gold Bill. It's a technology that lets you own and use physical gold in much smaller practical amounts than traditional coins or bars. So when Adam started the company back in 2012, it was really just a long list of technical problems waiting to be solved. Fast forward to today, and he's turned it into a globally recognized minting platform that actually produces legal tender gold bills for multiple governments. Um, it's easily one of the fastest growing precious metal companies in the world right now, although you wouldn't know that because it's private. And it has a bunch of patents and some world-leading counterfeiting tech to its name. Hi, Adam. Thanks for joining me. Um,
Great to see you, Harry.
and it's good to see you. You'll forgive me, but I wanted to start on your academic work because that's the kind of guy I am. I understand that you focused on currency and the role money plays in everyday lives. Tell me more about that.
Well, it feels like ancient history now, Harry. I was really interested in two things, and thanks for asking. Um, and there was no proper department to do this, so I had to, I was at the University of London and trying to put together advisors from several different areas, and they were highly indulgent of me, probably, you know, against their better judgment. I was really interested in what do people understand money to be, particularly in the early 20th century? And the reason for that is you saw this great fracture of how people talked about money as we saw a collapse in the gold standard, the kickoff of World War I, and different groups understanding and thinking quite differently about how we should think about government debt. And that nexus of argument proved to be prophetic because we had the same arguments again 100 years later. So I was really looking at what was the state of the art of monetary theory in that moment, and what were the arguments there, and that at a more public level, how were people thinking about money really around, is this an individual property? Is this something issued by the state? If it is issued by the state, who has rights over it? Who owns it? To whose benefit? Um, and it turns out we live in the world that was born in 1914, as far as I'm concerned. Really not end of World War II, as people think, but the the fundamental arguments have been going on longer than that, and that's what I got interested in as a historian.
Okay, and let me forgive me because you trailed it so well that I want clarity on the answer. Um,
Aha.
so what was that break? What did people think, and how did that switch? That what?
Yeah, I mean, I think gold has a certain implication, which is that money is fundamentally neutral and personal. Gold is an element. Gold is not partial to a particular government or a particular individual. And then the switch was really money is something issued by states, administered by bureaucrats. And what you think of that ability to print money, create money out of thin air, capture goods and services by the issuance of money, really winds up telling you a lot about how you think about the fundamental questions of politics. Is this a right of the property class? Is this an authoritarian or totalitarian right? Is this something that should be run for the benefit of the entire public? And I think that, in the United States today, we are uncomfortably swirling around those three polarities all the time. Um, which is why we see conflicts, say, between market performance and jobs data, for example.
So that I found that for some reason the first explanation you gave I didn't understand. The second one was perfectly intuitive and I grasped it immediately. And I see exactly what you mean. There's this objective. There was a point at which we had an objective quality of money because it was outside the state. And that is certainly not the case for most state regimes anymore. Money is an intrinsic part of the state's kind of function and order of control. So, and
And I think and there's an inherent tension between, Fed policy, central bank objectives and what the market actually does. Um, it turns out governments can't wholly control the economy, at least not yet, not successfully. I have my doubts they ever would be able to. Um, but they, certainly try. And private actors, banks, other major institutions acting for what benefits them and the ways that those groups work together or fight it out um, have tremendous consequences for us ordinary people, Harry.
right. Yeah, governments can't completely control money because you can't fool all of the people all of the time. So they will, sorry, can't completely control the economy for those reasons.
I think
Um,
it's also that authority only presses so far, and we all just kind of do stuff. The amount of surveillance and control you would need to actually control an economy is mind-bendingly larger than even the grandest AI schemes we've been able to invent.
that's a Hayek point, isn't it? Hayek made that
That's
argument. I'm incredibly suspicious of Hayek's arguments. Um, but he made that point, and I remember when I first came across it, I believed it completely. And now I'm becoming a little, technology's moved on, and there's a lot more they can do with, given AIs and given, you know, panopticon type surveillance levels. So maybe we are in a place where you can do that. But look, there are people who don't know you. I do know you,
Mm,
but other people don't know you. And I wanted to explain why I wanted to speak to you. Um,
mm,
and I was incredibly keen to get Adam to do an interview because one of my core theses is that we're in a very different global environment from that which prevailed for the previous 50 years. And it's in an environment where we're all going to face a significant challenge in preserving wealth or economic value or whatever. I'm a macro guy, so I spend a fair amount of time thinking about precious metals and monetary conditions. But your day job sits right at the intersection of gold, monetary history, and security printing, probably fintech as well.
mm,
And that I think gives you a granularity to your perspective, which is really useful right here, right now, for those of us who are pondering PMs and where they're going to go next. Um, Especially, gold is taking center stage in some debates about trust, inflation, debt, and global markets. So I wanted to put this is the two questions which are core for me. We just had a huge bull run in gold. It
mm.
looks a little bit like it might have stopped. So question one is what drove the bull run? So let's stick with it. Why did gold go up so much?
Yeah, I think there's two things that I think about, and I'm sure Harry, you'll have better answers than me, but we'll find out. I think the first one is an increasing global sentiment of international counterparty risk. You think about conflicts, you think about um, Ukraine, Iran, you think about the US not playing the traditional defensive last resort in quite the same way that it has. And that breaking up of certainties that have really sat for longer than 50 years, as you point out, um, is renewing the case for gold at a new level. That's the general scene. The other half of it is actually a drive, a cyclical drive in Asian demand at the consumer level for physical gold. And so you saw an incredible demand for small gold bars, essentially, largely China, rest of Asia. And that was the biggest number one driver of uh, gold demand in the first quarter of 2026. That demand is price sensitive. People do want to speculate, but they're more long-term holders. And what they're doing is they're shifting their investment focus to gold. And that trend line is not going away. It's only going to intensify, in my opinion. But
And
it will be cyclical.
is that focused on China or is it true across Asia?
I think it's true across Asia, but China has become, over the last, I don't know, 15 years, the number one purchaser of gold. And so, really what we saw, and I haven't seen this covered in the kind of US precious metals press to the extent that I think it should be. And this should make us all a little bit uncomfortable. This makes me uncomfortable. Let me speak for myself. What you really saw was American precious metals investors selling off their gold, saying, "Hey, I won. I got my good price on gold. I bought it at 2,000, 2,500. I exited it. I can tell my golf buddies I made an awesome play on gold." They sell it to a dealer. All of that is getting melted down, shipped to Asia, and Asian consumers are buying it. And so what you really see is a global redistribution of the gold supply from one set of uh, everyday investors to another set of everyday investors, and a trend line going in that direction. And I think that's pretty profound. And the American consumer market for precious metals has been really dollar optimizing most of the time. People want to get dollars. I think that the Asian story is very, very different. So they don't want RMB and they don't want dollars either. They want the actual gold. And that's why you see the trend not in gold ETFs. Gold ETFs were modestly down in Asia. You see it in bar form. That's the best way to hold it long term. It's the best way to securely get all the benefits of gold. And I think that that demand trend is only going to continue. The question is when do American consumers wake up and stop looking at this as a speculative fun and games and realize they really ought to be owning gold for the overall international situation. And for my countrymen, if we can still say that, I really hope that they start to pay attention to that.
You raised like 10 points. That, um, so the first thing that occurs to me is you didn't say,
Hmm.
you raised a point about liability-free assets and the difficult, if you own gold, you can't have it confiscated. At least one state found out the problem of owning dollars as a reserve. Um, and others can watch. But in fact, when we look at the data, the central bank holdings didn't really increase. The price increased. So as a proportion of total reserves, central bank holdings didn't go up, went up a lot. But the actual amount of gold bought didn't budge as much. And I can see that if you were, say, Russian or Chinese, you're a central banker, I should say,
Hmm.
um, you ended up owning much more gold because you couldn't own dollars. They either got frozen or you feared they would be frozen. And other central banks can look at that trend as well and figure out that this isn't, that wasn't exactly what they had in mind for their reserves. Um, but the net,
But let's talk about that, Harry.
sure,
I want to drill into that if we could.
yeah, yeah.
Um, I think they did modestly uptick, if I'm not mistaken, overall central bank holdings, in addition to, the price appreciation. If gold for central bankers today were simply an allocation question, what you would have seen is a direct sell down of gold to maintain their
Good point.
allocation position. And
Yeah.
they did not do that.
Yeah,
What
that's
that
it.
tells you is that they actually are long-term holders in gold. Maybe they weren't buying because they feel like, it's a little bit expensive right now. The price movement actually took them up more than they could have possibly bought. But in terms of their asset mix, they're very happy for gold to go higher in terms of their overall mix. And that trend line is the important thing. And if it were simply, we'll say it again, if it were simply about, um, asset balancing with gold, they would have sold right into that system, and they
That
did.
that's a great point. I always love. There's a Conan Doyle Sherlock Holmes called The Dog That Did Not Bark.
Hmm.
And you're absolutely right. These people are not incapable of rebalancing their portfolios.
No.
So they must have actively wanted that shift to effect.
Mhm.
So I want to get back to the China thing. Before I go to it, I wanted to ask you my other question, which is like the $64,000 question. Um, the bull run we had looks like it peaked in January 28th, 5,589. Did we peak or are we treading water till we make a new high? Why is gold coming down now?
I think it's short-term psychology. I think we got priced in a certain amount of global conflict. Um, I think the average consumer, which again I believe to be the real driver of gold, is feeling like things are kind of a mess. But gold got kind of hot. Maybe I can buy some more cheaper tomorrow. I don't think that that's a long-term trend, and I tend to be the worst person to ask, timing the dips, Harry.
Yeah.
I don't have a feeling about that. What I have a feeling about is $20,000 gold at some point in the not too distant future. And that the basis of that is $270 gold in 2000. It's a long-term trend line driven by the things that people always talk about, US debt, global instability, geopolitical shifts, no longer a single pole, hegemonic structure, um, consumers and, small investor looking for ways to park money, and central banks definitely needing diversification. Those trends are going to continue. I don't think that we're seeing, unfortunately, the end of multiple international conflict. I don't think we are seeing a truly healthy US economy. I think it's a very bizarre economy right now, but I don't think it's a good one. And I think that the fundamental pushes are gonna drive it more.
You know, I had a working hypothesis. Let me share that with you. So there's kind of medium scale war going on. Actually, maybe it's a small scale war. Maybe it's better to say that in the Gulf.
Hmm.
And as a result, some of the biggest buyers of gold with some of the highest free cash flow revenue, for their reserves, are currently not buying gold, because
Hmm.
I think they've got other things to spend the money on. Um, and I think also I saw headlines about Turkey selling some of its gold holdings. Turkey will be significantly affected by flows of energy as well. So I think that military disruption and trade disruption might be forcing central banks are accumulating reserves under normal conditions. Right now, they might be decumulating reserves. which might be putting in certain central banks for sure, which might be putting some downward pressure. But that's just I'm always formulating hypotheses. They're not always right. So I just wondered if that might have, be a factor. But you are right. Treading
I think
water.
so. Yeah, I think so. And I think that we need to think about gold differently. And there's two gold products, in my opinion, that most of your listeners will be thinking about. They'll be thinking about gold ETFs and they'll be thinking about physical gold. Um, I'm not a buyer of gold ETFs right now. I think people who are buying gold ETFs are speculating on short-term price, and it's the best way to realize short-term price movements in gold markets based on things like geopolitical risk. Um, I don't know that we're going to go up $1,000 again tomorrow or next, this coming month. I don't have any feeling on that. As a long-term holder of gold, bar and coin, I think it's one of the best things you can do. I think that most uh, investor portfolios, certainly if you have a 401k and that's the majority of your holding, certainly if you have a significant proportion of your wealth wrapped up in your housing, you were probably woefully underallocated on gold. Um, and I'm a net buyer of gold myself, and I continue to add to my position. Haven't sold an ounce yet. I'm not buying on ETFs. I'm buying physical.
So that implies a view on the premium and also the relationship between financial gold and physical gold. I saw another interview because it may not look like it. Anyone watching this it may not look like it, but I do some preparation. This is going to shock you, but I do some. Um, and you talked about a crisis in the physical gold market. Can you
Mm.
can you elaborate a little bit about what you mean by a crisis in the physical gold market?
Yeah, so this was really at the height of the buying and selling. And, at the end of last year, start of this year. And then there's a longer term crisis I'd like to talk about too. The short term crisis is that gold markets never perform properly when you really need it. It's very difficult to get gold. Gold premiums go up in really bizarre, unexpected ways. It can be very hard to get gold. And you can also have problems where there's a glut of supply of gold or silver, even more so, to be sold. And so it's actually very difficult to sell it in terms of premiums. However, in those cases, you're almost always winning because the price is so much higher. You know, I don't think we buy gold for, or I wouldn't counsel to buy physical gold for, a general trend line to sell off slowly. To me, it's the money in extremis for yourself personally, or in a general moment of crisis. And in those times, it doesn't perform. And so, people's concerns about things like premia really shift in weird ways. I mean, um, silver refineries were not accepting silver because they were backed up for a year. There's no capacity to refine silver, right? What do you do with that?
Right.
That's a breakdown of the market. It's really a breakdown of the channels through which liquidity occurs. It's also a function of American consumers really excited to get dollars, Asian consumers really happy to take it off of them, but they want it in a different form of bar with a different name on it.
In the case of silver, I imagine there's a continual flow, simply because nobody lives forever. So people are constantly inheriting small quantities of silver that they have no affinity for with or don't care about, and then they take that down to their local gold and silver dealer and literally liquidate it. Um,
That's right. And that goes to the longer term crisis. Um, and I really understood this crisis when I had a friend, one of my better friends, she called me up. Her father was unfortunately diagnosed with dementia, and he had had a reasonable middle class guy. He had a reasonable situation portfolio, which he'd liquidated and bought an enormous amount of physical silver. And my friend, who had no affinity for precious metals, was furious with him, although it had performed very handily,
Yeah.
because she said, "What the hell do I do with all these freaking coins?" And so she was running these errands, taking it to different silver dealers, precious metals dealers, trying to send it into an online place, going to these other ones, and had no idea if she was getting ripped off. And, I helped her because I knew, I helped her review bids for the physical silver, but she freaking hated it. And so the bigger breakdown in the physical market is that it's actually very difficult to move coins and bars anymore. The fundamental reason for that is there's too much counterfeit out there.
Hmm.
It's very easy in 2026 to purchase counterfeited gold and silver. Minting technology, once the marvel of material science, is now ubiquitous, and it's super easy to get counterfeit product. The Secret Service has no angle of attack on this. Governments have no angle of attack on this besides, getting a physical break on the cases.
Hmm.
And so essentially what's happening is if I buy a gold coin, I've got to go hunt down a dealer and see what he'll do to take it off of me. And if he's having a liquidity crisis or a lot of gold is flowing in, yeah, you're going to be under premium,
So
under the spot price.
are
And that's a
there
problem.
are there counterfeit gold coin? Because I can imagine for coins it may be completely impossible to distinguish a good counterfeit from the real thing.
We get a tremendous amount of gold coin and bar in all the time. And we have received tungsten fakes from suppliers to the US Mint.
Hmm.
And we only found them because we melted them. There's a deep problem in the market. You can
Ah,
go on Alibaba and buy gold coins for about 700 bucks. They will make you any issuer you want, and it has enough gold to fool an XRF.
so gold on the outside, tungsten on the center, in the middle, and oh, cute. And that will
Except you're
completely
unless you're trying to
destroy a premium.
unless you're trying to preserve your fortune.
That's
And
right.
so, I would say, if you don't really know what you're getting, and there's a lot of mistrust in the physical market as a result. More than consumers are led to believe. They don't want to have um, consumers bolt for the door. The
Yeah,
overall
yeah.
story of gold is very good, but traditional coin and bar has serious problems. And that's why, Harry, with all the love in the world, if you came to me and said, "Hey, Adam, I've got 5-ounce coins. Would you give me 20% under spot for them?" I'd say, Harry, good luck with that.
Yeah,
It's
nobody
it's not
knows
worth
what
the
they don't
risk.
know. Yeah, it doesn't matter
Exactly.
how honest you are. You may have been suckered by somebody two stages in the buying selling chain earlier.
That's right. And that's why pretty much all precious metals dealing happens through dealers today. And that's a bizarre backward system that the minting of coins solved 2,500 years ago. And it's really a recent problem with the ubiquitousness of minting technology.
Hmm. Fascinating. A breakdown in trust,
Hmm.
destroying a market. It's quite. It's you see it, but this I hadn't really expected to see it in this location.
Hmm.
Very interesting. Um, so I have some gold. I actually went to Costco and bought some not that long ago. Simply
Good on you.
because, yeah, well, someone we both know suggested it, and I wanted to try it to see what happened. Um, I had other bits of gold and they're stuck in a bank where they're safe, which means that the IRS can come and get them later when they pass a new a new government order, just like FDR's in
Mm,
34, I think.
mm,
You never know which risk you're going to be exposed to. The reason why I bought gold, so there's the meta reason. You're right. I see the central bank point you make that fiat currency and for central bank reserves is no longer secure because all dollars live in New York, all pounds live in London. They're all potentially cancelable, freezable, and every central bank controls that issue of currency, and there's no getting around that. It's everything. If you don't, you need to be familiar with correspondent banking, but the bottom line is all dollars live in New York, whether you know it or not. Um, I'm long of gold because I'm bearish of fiat currency. That's the
mm,
underlying driver. And when you tell me that Asians are buying gold, it makes my spider sense, it triggers it because the people with the longest experience of fiat currency and how it works are the Chinese.
mm.
They have seen literally hundreds of fiat collapses since they started using fiat over 2000 years ago. So if anybody can sense that this is a bad time to, to own too much fiat currency, it will be Asians. Same's true for the Japanese who experienced a complete economic collapse after the Second World War. Same's true all over Asia. I'm not that, and it tells me something about global retail preferences that we have this flow of gold out of North America into Asia. Um, am I right to think that a lot of it is this a steady loss of confidence in fiat?
I think it is. And I think we need to distinguish between fiat in general and a specific fiat, right? I think for those who really got excited by the people with the orange glowing eyes in the Bitcoin world, um, there was this idea of, total fiat collapse. Um, Fiat moves too many goods for it to go that way, in my opinion.
Mm.
Um, Too many people, basically, functionally, everyone is uh, dependent on getting their next loaf of bread for it to collapse in that way. And so what you see is, if you've ever started to lose a game of tug of war, the rope slips, burns your hands, then you grab it again, and then it slips and it burns your hand. That's what we're
Yeah.
seeing right now. But the other thing we're seeing is a rebalancing of different fiat currencies and a move to pull value away from them. So what I think you're going to see is different central banks setting up different trade, different monetary partnerships that will not have the United States at the center. I think you're going to have island nation partnerships. I think you're going to have Pan-African partnerships. I think you're going to have um, Russia and its partnerships. I mean, these are already happening. And the result of it is that the dollar will not be the intermediary for that. In that case, and in the case of a central bank that might be thinking, I'm not sure who my partners will be. I'm not sure where the draw on my reserves will be. I'm not sure what the strategy will be in 5 years. Gold looks like a pretty safe bet.
Sure. Yeah.
So I think that we're seeing a rebalancing where, you know, the the denominator is not always U.S. Treasuries, and the shift of that is probably inexorable.
Yeah.
There'll still be a demand for U.S. Treasuries. Don't get me wrong. Probably the price will go up, but other things are going to step in, and it's going to be a basket. And probably, already we just shifted, and gold is the number one item in that basket.
So I can tell. I would argue that we're seeing an erosion of demand for US Treasuries.
Hmm.
And I think that's just because they're producing so many of them. But the reason I think we're seeing an erosion of demand for US treasuries is that the proportion of treasuries issued at the long end is going down. And it's not a Trump phenomena. It was going down during the Yellen administration as well. They were leaning on issuing more debt at the short end of the curve in the bill section of the curve. And that's
Mm,
still the case. And, you know, why would a government do that? Well, for the same reason I eat potato chips. It's easier. It's easier and I like it and it solves problems, but it is always the easy way out at meal times. And I think that line of least resistance is part of the problem. The Swiss are not doing it.
mm,
It's other countries that have budgetary issues. I think that's why. But you said something actually surprisingly, I think that's quite a controversial thing. Are you arguing for de-dollarization? Do you think we're seeing a trend towards de-dollarization?
I think there's more hedging in central bankers. I don't think that we're going to get to zero. I think, the US has a continued powerful role. Um, but I don't think it's a fact that there will be no alternatives. I think we're seeing a shift in a look for um, multiple forms of money. I don't think that's as weird as it might sound, Harry. And the reason for that is when I, travel all over the world, I with Valaurum, I've been to Africa numerous times. We're always in Europe. We're in Asia and countries big and small. It's extraordinarily unusual to find people who are not thinking in multiple currencies at once at a consumer level. If you're somebody of average means around the world, you probably think about dollars, you think about your local currency, you think about any other trading partners that might be important to your country. And it's really a myopia of Americans that it's just been simple to think that the dollar is the only thing that matters. I think that trend line is going to increase. And I think
This,
that finally Americans are going to start to have to pay attention to multiple currencies.
yeah, this is going to sound like me being a sycophant. I probably am a sycophant, but I didn't mean for this to be evidence of it. I agree with you. I think this de-dollarization argument, there's some really dishonest rhetoric floating around
Mm,
where people argue that um, the dollar will never be replaced as a primary reserve asset, and which is I agree with that, but it's not contradictory to the idea of de-dollarization. You can
mm,
have the proportion of dollars in reserves can go from 70% where it was not that many years ago to 40%. That's de-dollarization, even if the
mhm.
dollar remains the primary global reserve asset, because there's
Right.
nothing that can replace it.
Yeah. I generally agree with that. And I think that what you're going to see is rather than all economies looking to the dollar, you're going to see more complex network effects. That's my thesis. Where, different countries are holding, you know, interrelated debt, interrelated notes, and they choose those based on geopolitical factors as much as, oh, we'll just do dollars forever.
Let me ask a more trader-oriented question.
Hmm,
So we're both bullish gold. We're both bullish
hmm.
gold on a long-term view. That doesn't mean you buy that we can say that you buy at any particular level, but we're both bullish on a longer-term position for various reasons. What would make you change your mind? What would make you think, oh no, got it wrong. Gold is not going to 20,000.
Yeah, what timeline are we talking about? I mean, I think right now gold is relatively cheap, probably finding its floor. I would be a net buyer. I think in the, next couple of 3 years, I think things that could easily drag on gold. I think if we saw, domestic social stability, I think if we continue to see high interest rates, um, I think if we see a lot of consumer pain, um, I think if we see the Fed unwilling to print money, and I think if we see little military conflict, all of those would tend to suppress the price of gold. As it happens, I think we are likely to see an uptick in social instability. I think there's enormous pressure to bring interest rates down over the medium term.
Yeah.
I think we are not in a very happy consumer situation for most people at all, and that would tend to drag on the gold price. I do think that that's an issue. Um, but I think that we're going to continue to see military conflict, perhaps not initiated by the United States, but I think that we're in a world where more countries are going to try stuff on. I don't want to point any fingers,
I
but I think that that's going to happen, and I think that we are likely to see another money printing event in the next 2 years by the Fed. I don't know what the excuse will be, but I know the cause, which is dollars in people's bank accounts wins elections, and that is extraordinary bullish for gold because the kind of wiser segment of the population tends to park those dollars in another asset.
so I agree, and I agree with the way you framed it. Social stability does seem quite a way away. Um, and other things seem more like. I would argue that we're right on the cusp of watching Western European central banks expand their deficits dramatically,
Hmm.
because they're unwilling to live in a world where the their adversary states are can disagree with them, and the competition for resources globally is hotting up. I'm that's not really a prediction because it's already happening. It's more
Hmm.
of an observation. Um, there's some science fiction writer, William Gibson, explains that the future is already here. It's just not uniformly distributed.
Hmm.
And I
Hmm.
think he's right. So I can see, I have a suspicion we're going to see European deficits instead of that 3% debt ceiling, which has been suspended already. Those deficits are going to expand dramatically to achieve all the objectives they have to achieve in a very difficult social environment. So it's not just the US that's running in this way; it's a lot of countries, including Japan, including a lot of Asia, including Western Europe. Um,
And I think you're in a very challenging, uh, you know, production situation. One of the things that scares me the most is um, U.S. markets propped up really only by AI spending. This is a probably a boring topic to most of your listeners,
no, no, quite the
um,
opposite. This is
but
even more
yeah,
central.
I think that the long-term trend line of AI is to eliminate jobs, eliminates consumer purchasing power. Um, and I also think that we're likely to have a strong AI correction, even if you're the biggest believer in AI.
Yeah.
I think we're likely to have a strong correction. All of those are problematic for the economy, and that could be the thing that tips it off, that gets us really going.
Yeah, we'd have to fill the void with debt issuance and monetary issuance, and there's no real alternative. Um, and I'm with you. I've got a slightly weirder framing of the AI thing. I'd argue the public sector in the United States has determined that it must lead in AI, and that's
Hmm.
why they created incentives to ensure that the US is a world leader. And that's partly because it's such an important military tool.
Hmm.
Um, You wouldn't want China to be the world's leading AI power. It would be an unfortunate circumstance. And then you have the private sector, some of the big data-driven franchises like Google, for example, Meta, whatever. They also are compelled to lead in AI because they don't want their competitor stealing their lunch.
Right.
So the two factors force us to have an AI bubble, um, and there's no escaping it. Everybody has to jump on that roundabout and try their best to hop off at the right time. But everyone is forced to be on it one way or the other, both the public and private sector actors.
That's right. And if you look at the overall S&P less AI spending, it's pretty abysmal.
Yeah, it hasn't moved.
The value investing in good companies, it's not there. It's really, NVIDIA and froth around ChatGPT and stock swaps and this sort of thing. And that all points to me to be a lot of froth, a lot of froth. And is the spending there to justify, or is the benefit there to justify the spending? I would argue not yet. When do we hit that? We shall see.
We
We
may
shall see.
never, we may never, but nobody has an alternative because it's not as if Google could decide, you know what, we've decided not to do
No,
the AI thing. We'll leave that to our competitors. It just isn't.
absolutely right. Absolutely right.
Um,
Uh,
and what bothered me most about it is I look at this thing and you can see uh, earnings are there. The earnings are there because we're building out the AI infrastructure. Um, but there's no guarantee that and one of the AI, Yann LeCun, who was one of the early AI pioneers, a French AI expert, he argues that this is a fundamental misstep, that the way we've designed AI, it's not really it's not really learning anything. The
hmm.
systems won't work and they won't yield what we want them to yield. So we could bin quite a lot of money building out a system which doesn't work as well as now it won't be all of it because those data centers they just deliver compute. So
Right.
if our first set of models are wrong, we can move on to better models and we'll have all the compute we need and compute prices will collapse because we built out an enormous amount of compute. But in the short run, these valuations uh, do not assume any, do not factor in any risk of failure or delay or a lack of commercial opportunities. Um, so what can I say? This all looks a little bit potentially catastrophic, but
I think that's right. I think there are, to me, clearly directional problems with everything towards LLMs. But the other thing I would say is if you have all of these big tech stocks being pulled up because of AI investment, do we really think they're all going to win and just be that much bigger?
no, absolutely.
No. And so they don't sum.
Yeah,
All of them going up, it doesn't sum to the net benefit. I don't believe. And and that again points to a bubble. You could have a great couple of winners. All the other ones that have ridden the AI bubble up, I think they come back to earth and maybe quite hard.
yeah. We're running. I'm running out of time, so I wanted to ask you a question about your
Hmm.
business. Because
Sure.
it's kind of rude to have someone on suck every piece of knowledge about the wider gold business out of them and not talk about their business
Hmm.
at all. Tell me about Valorum and its prospects. Where's that business going?
Uh, well, I'm a huge investor in it, Harry. We are solving two simultaneous problems with the physical gold market. And what I want to explain to your listeners is that market is so big, it's unthinkable to most people. I mean, you're talking about I just did it. It was 474 tons of gold net demand in the last quarter. You're talking about hundreds of billions of dollars moving around. All of that has a physical toll fee. It all gets, whether it's Brinks moving it around or, what form of gold it is. Um, the way that that physical gold is delivered really matters. And what we've seen is a collapse in the ounce as the standard through which people invest in gold. In 2000, you could buy a gold coin for about 270 bucks, and that was pretty affordable if you wanted to sock away gold regularly.
Right.
At $4,500, $5,500, hey, $3,800 gold, it's really less than 1% of the US, household market that can do that in a month, even if they make no other investments.
Yeah.
So what we're seeing is this necessary slashing of the fundamental unit of gold. And Valaurum is a nanotechnology company where we deliver gold bills. We deposit the gold atom by atom, and we're able to deliver $200 to $500 worth of gold at a time, exactly what consumers need, tied, in the same way to what people need for paper money. And we have absolutely state-of-the-art anti-counterfeiting features that are not just harder to counterfeit than um, a gold coin that's essentially been around unchanged for 100 years and fundamental technology is 2,500 years old. We have new technologies where it's harder to counterfeit than a $100 bill, which is the standard of physical
Sure.
money in this world.
Yeah.
So, what I see is trillions of dollars of gold are going to change hand and change form over the next 10 years. Um, the Valorum is the fastest growing form of gold in the United States. It's going to globalize. The US is really a tiny consumer of physical gold. And, I think that it's going to be the main way that people own gold in the coming 10 years.
Really interesting, Adam. Thank you. I think we should probably call it quits because once you get beyond an hour, nobody's still working out. So, so
Sure. Lovely talking to you, Harry. I know, we could talk for hours and, I hope we get the opportunity to do it again.
I hope so. I hope so. But thank you so much for coming on and sharing some of these observations because, I pay attention. I'm focused on gold. I'm focused on silver. There's things happening in both those markets, but I don't have the granularity that you have. I don't see the kind of the retail flows and the what the market participants are saying. And I think for the people, all five of them who are watching this, there may be a few more. So you've had a few observations that would be really helpful in them deciding their risk and where they should come back in, if they should, and when they should come back in. So
Mhm.
thank you so much for that, and let's do it again sometime.
Thanks, Harry.
Have a good one. Bye.